Fed Chair Jerome Powell says, if appropriate, the central bank will hike rates further. I'm Lisa Bernhard with Reuters, and I'm joined today by Kevin Nicholson of Riverfront Investment Group. Kevin, what did you make of Fed Chair Jerome Powell's comments today?
Lisa, I thought that the chairman's comments were right in line with everything that I was expecting, because he had stated previously that he was going to keep rates higher for longer. And this just kind of aligns with that statement, and that they were going to be data dependent. And if the data comes in, he's stated that he would react appropriately. And so having him say that, he could tighten further is right in line with that.
Well, this may be right in line with what you're thinking. It's not necessarily in line with what many investors were thinking. And I believe the market was pricing in a rate cut by, say, May of 2024. Do you still see that happening?
Personally, I do not see the Fed cutting rates at all in 2024. The expectation has been that we were going to see a dramatic slowdown of growth in the economy. But that is kind of hard to imagine right now, given the fact that in Q3, we saw GDP grow at 4.9%. So that means that we have to slow down. Not only do we have to slow down, but we have to slow down pretty rapidly to get cuts that soon. And I just don't foresee that happening at this moment.
Kevin, let me ask you this. Have you ever lived through a period where the markets have really hung on one thing so specifically, the way the markets are hanging on the words of the Federal Reserve right now? And do you think that we will ever break out of this cycle?
Well, I think for the last 15 years, we've basically been hanging on the words of the Federal Reserve. And the only way that we're going to break out of that cycle is if the Fed takes away the transparency and goes back to the way it was, where they're not telegraphing their every move to the markets. But because we are in a cycle where they telegraph everything, we are going to continue to hang on their every word.
So stocks are down today, not surprising given Powell's comments, but it's been an interesting day for the bond market. What are we seeing?
The bond market is having a very confusing day, because it started out with yields actually starting to rise because of a poor 30-year Treasury auction. So the long end of the curve, going from the 10-year to the 30-year, after that auction was reported, and that it was the yields were allotted at a higher level than were expected, we saw the entire long end of the curve, of the yield curve, actually start moving up. And so prices falling and yields going higher. And then you add Fed Chair Powell's comments that they could potentially raise rates high even more if they needed to. That's just putting more pressure on the bond market. And so yields need to come up to reflect the fact that the Fed is going to stay higher for longer, and they have the potential to raise rates even higher than the bond market had expected.